You're listening to The Money Hour with your host, Tina Mitchell, and co-host Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts Tina Mitchell and Keelan Harvey.
Welcome back to The Money Hour with your host, Tina Mitchell.
And co-host Keelan Harvey.
Your local mortgage experts right here on 1150 AM KKNW, the Saturday, July 21st show. We are here to help you build a strong financial blueprint, 1 week and one show at a time. If you're listening to our show or a different time or day, you're listening to a rebroadcast, but we're here to answer any questions or connect you with the guests that we have on the show today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, Peng T of John L. Scott. Is there something changing in the real estate market? A little bit crazy out there. Peng, thank you so much for joining us in studio today.
Yeah, thank you for having me.
And a little bit about Peng. Peng was born and raised in Bellevue. He attended University of Washington, where he graduated with a computer science degree and worked as a software development manager for Amazon. He's had involved with real estate industry for over a decade, where he invests in real estate properties, house flips, and as a realtor. With his tech background, he is extremely tech savvy and knows how to make technology work in real estate. His experience at Amazon trained him on how to evaluate and interpret data. His experience from investing and flipping has saved his clients from overpaying on a home because he understands the true cost of repairs. Peng is a Chairman's Circle Award winner, distinguished for being a top producer for John L. Scott broker among the company's 3,000 brokers. Again, Peng, thanks for being here.
Yeah, thanks for having me, guys.
So Peng, we're starting, believe it or not, in Seattle, we're starting to see homes take longer to sell and even some price reductions. What the heck happened to the real estate market?
So I think that's a very good observation. If you're likely driving around the Seattle area, you're probably starting to see, for sale signs popping up. And on the weekends, you're probably seeing more open house signs showing up. There's an explanation for that. So the Northwest MLS released data showing that this past May, we saw the highest number of new listings that hit the market in the past decade. And you follow that up with the month of June, which surpassed May even more. And when you look at a year-over-year perspective, we saw a 43% net increase in terms of new listings compared to the last June. So what does that translate to? So a lot of realtors actually look at what's called months of inventory. So all the new listings has translated to about a 1.3 to 1.4 months of inventory. And to take that into perspective, though, is that a neutral market is about 4 to 6 months of inventory, where there's not really any price appreciation happening in the market. So we are still in a seller's market. But if you look at relatively to what we've been experiencing in Seattle over the last year or more, most of the inventory is typically around the 0.6 to 0.7 months of inventory.
So, Peng, why do you think that we're seeing this surge of new inventory? I mean, it happened so quickly.
Yeah, so I think there's a couple reasons for this. One is seasonality. So if we look at a historical pattern in Seattle, a lot of times we will see the highest number of inventory pop up as we enter the summer seasons and throughout the summer season.
Mm-hmm.
However, I think there's something else that's happening beyond just a seasonality factor. I feel that Seattle might be hitting a price point where the sellers are more than willing to come off the sidelines. So an analogy I think of is, imagine if you are on an airplane and all the seats are full, but the airlines are looking for someone to vacate their seat, and they'll compensate you for it accordingly. They'll start raising their prices, and eventually someone will take the bait. So maybe this is what's happening on the Seattle real estate market. And another factor is that, outside of the core city, if you go to the suburbs of areas such as like Bothell, Woodinville, Redmond, Sammamish, there's a lot of new construction, right? These are not landlocked areas, and a lot of the new constructions are starting to complete, and that's also adding to the inventory curve.
So Peng, how is demand keeping up with the increased inventory? That raises that question.
So good question. From a demand side from a year-over-year perspective, we are looking at about 10% decline in terms of pending sales. So in other words, even though Seattle has experienced more new inventory, the number of sales going pending is not keeping up at the same rate. However, there's one thing to note still is that even with the net new increase, we are still looking at about a median price of about a 10% year-over-year increase still.
So, Ping, the apartment market has also increased vacancies with some landlords giving away a month or two free rent, which is just crazy because you've had people just all the multiple offers on rental properties. So how is this related to the purchase side?
So I actually think that this is a contributing cause to why we aren't seeing the pending sales keep up with the new inventory. So I feel that if you are a renter, finally you are seeing some rent relief where you aren't seeing constant price increases. So perhaps by the end of your lease, you are less urgent towards wanting to purchase a home.
Makes sense.
And if you look at the demographics of folks moving here, the companies are hiring mostly probably millennial generations who are coming to the area. And the millennials are now who are typically purchasing like your condos and townhomes who are starter homes. And if they're saying, oh, maybe I don't need to buy right away because my rent isn't really increasing, that could also stagnate the homeowners who want to trade up as a result.
So, Peng, we've been seeing, for a long time, these multiple offer scenarios and this crazy escalations in our market here in Seattle. Is that still taking place?
We definitely are. So the thing to keep in mind still is it is still a seller's market. Remember that the neutral market is around 4 to 6 months of inventory, and anything less than that is a seller's market. And we are still around 1.3 to 1.4 months of inventory in the King County area. So it is also very neighborhood driven. So areas that are have strong schools or there's a lack of new construction are close to the job centers. The popular neighborhoods are still seeing a lot of strong activity.
And so it's really important, and some advice for people that are listening to the show today, that sometimes when changes happen, you can see more into it than what it is, and it can be dangerous on how you're going to react to thing. And whether you're talking to a seller, we're talking to a buyer, but the numbers are so important all the time. And so when you're going to list your home or you're going to buy your home, to make sure that you're consulting with an expert like we have here in studio today that can really show you those numbers and what's happening so that you can move forward with your best offer based on, what the market warrants it to go for. So, Peng, what changes in the market do you see happening for buyers if the inventory levels continue to increase? How's that going to look?
So first off, I think this should actually be probably a welcome relief for home buyers, because I think for several years,
yes,
buyers have had an unfair advantage in this game. And if the inventory levels continue to increase, buyers shouldn't have to be forced to make a decision within hours of seeing a home, a life-changing decision where they say, hey, should I buy this home, right?
Yeah.
They'll be given a little more time to research more thoroughly, find out, is this the right home for me? Now, additional things, they won't have to take on additional risks, things like waiving their inspection, waiving their financing contingencies. But more importantly, I feel that, there'll be more balance in negotiations where it's just not a one-sided affair for sellers.
So important to have that balance, and hopefully not having to agree to pay $50,000, $100,000 over what the appraised value comes in at. That was a little craziness as well.
Indeed.
Yeah, so this seems like it'd be welcome news by homeowners who wanted to sell but are concerned about not being able to find the next home that they can move into in time. So what advice would you give those homeowners?
So kind of address those 2 points. The first, absolutely believe that the homeowners who have been wanting to buy a home but have feared not knowing what home they'll be able to move into, this should be a welcome relief for them too, right? Because in a fast-moving market, these homeowners would have a very, very low chance of getting an offer accepted where it's contingent on their home selling. But if the inventory levels rise and the market slows down a little bit, maybe they'll have more sellers willing to take on that contingency. And as far as advice for those folks, a couple different ways. One, what puts them in the strongest position is that they list their home, they get it under contract, or once it's closed, they also ask for a rent back. Now they're shopping without any contingencies. They already have the money in their pocket. However, I understand that some owners still will have that fear. I don't know what I'm going to get myself into, right? another aspect you can do is work with a good lender, right? So you can find lenders who can do home equity line of credits or do a bridge loans to front you the down payment in the absence of purchasing or in the absence of selling your home. And third, maybe now you can find homes that are, sat a little bit longer. You talk to those homeowners and maybe they'll also be willing to accept, a contingent home sale offer.
Yeah, and it is crazy because I've had a few of those contracts in the recent come over with contingent on their home selling, which was surprising that you can get that anywhere in our market. But again, like you said, being able to get more into a balanced market is really going to be a great thing. So somebody wants to buy right now. Is it a good time?
So I get this question all the time from, if not most or all my buyers. And I always tell them, purchasing should be a lifestyle choice. You buy when it's right for you. And if you believe you need to sell your home within the next couple of years, honestly, you should just keep renting. The reason why is that if you need to sell within the next couple of years, you're betting on the fact that the market is going to continue appreciating. And I feel that it would be naive of us if we believe that it's going to keep going up and up forever, right? Because the markets are cyclical.
Mm-hmm.
Now, if the plan is that you're going to live long term in the place, being defined as 5 to 10 plus years, then I'm very bullish on the Seattle economy. I grew up here. If you look at the economy, you'll see that on both sides of Lake Washington, you have Amazon, you have Microsoft. Each employer is employing more than 40,000 plus employees on each side. You're also forgetting that there's Nordstrom, there's Boeing, there is Expedia, there's Costco, T-Mobile, a bunch of other companies that I'm probably forgetting. And not only that, there's also like 100 plus tech companies that have now, resided either their satellite offices or headquarters here, such as Google or Facebook, who are creating multi-thousand employee campuses in the area, right? And one thing that will always remain when you have a lot of companies is they're going to hire. And with hiring, that means you bring people from outside of the area to this area. And one thing they always need is housing. They're either going to need a rent or they'll need to buy.
Yeah, and the real estate market, historically, it follows employment. Employment's doing well, real estate's doing well. If employment's not, real estate's not. That's typically the way it goes. So I think we're pretty good here.
Peng, we'd love to hear a buyer or seller success story from you. Can you share?
Sure. So one that kind of comes into mind is actually on a new construction where I had a buyer who was interested in this new plat from Connor Homes. And a month prior to the actual pre-sale, my buyer had already, he already knew exactly which lot they actually wanted to buy. And the month before the actual pre-sale actually happened, I kept in contact a lot with this site agent, so to the point where by the time it was the day before they released the inventory, we provided all of the offer submission to the site agent early. And when we showed up the next morning to the site, there was a sold sign on the actual lot. And first, when my buyers showed up to the property, we were actually a little concerned because the property they'd been eyeing for the last month looked like it was sold. And there was this long line of customers waiting for this home or to look at the pre-sale. So we went up to the site agent and he said, wait, why is there a sold sign on that property? The site agent said, that's because your buyers have it. So they locked it up for my buyers before the general public ever had an opportunity to take a look at the property.
So awesome. And, that kind of, as we're wrapping up time here, I'd like to ask you one more question because you just made me think of something with the new construction. What do you see happening with new construction in our market? Are we going to see builders start? I know that there's a lot of tightness on financing and restrictions and things. What do you see happening?
So in terms of things I think we'll start seeing changes is that I feel that a lot of new construction developers have been hesitant towards, giving away things such as like appliances or upgrade packages as part of the offers. But if we have more rising inventories from resale as well as other new construction lot as competition, developers will have to be forced towards extending out a couple of different upgrades for free, I think, to buyers. I think pricing-wise, developers are pretty sensitive towards price reductions because they have to try to protect their lots for other homeowners. So you'll still have probably likely a better success towards negotiating those upgrade packages rather than price reductions.
Yeah, that's really great advice. So if you're looking at new construction, I mean, everything's about strategy, whether you're going in and buying resale or buying new construction. And that is a really great strategy to understand. We know the importance of finding out what's important to the seller. While with new construction, as Peng said, it's really not about, you can negotiate in other areas, but not price. So get those upgrades and things that way, or get them to pay closing cost or something to where they're not having to bring down the value of that entire project. Well, Peng, thank you so much for coming into studio. Really appreciate you being here and sharing your wealth of real estate knowledge.
My pleasure. Thank you, guys.
Coming up next in the Money Hour, achieving your lifestyle goals in the hottest market in the U.S. Amanda Wright of Coldwell Banker Bain, right here on 1150 AM KKNW after this short break.